Joining us now with more on the Fed and the dollar is Kathy Lien, Director of Currency Research at GFT Forex. Kathy, always good to see you. And as Sarah correctly pointed out, the devil's always in the details. What's the Fed statement going to be like today?
Well, I think that given the recent improvements in U.S. data, the Federal Reserve really has no choice but to at least acknowledge the fact that the labor market is improving and consumer spending is picking up. So I do anticipate a little bit of more upbeat tone from the Fed, and that's pretty much what we're seeing in terms of the price action in both the U.S. dollar, bond, as well as equities over the past couple of trading days.
As Sarah mentioned, if that upbeat tone does in fact come to pass, what's the dollar going to look like about 216 or 217 this afternoon?
Well, 216, 217 is a very short amount of time.
Yeah.
I think that if we do have an upbeat statement, that's a good chance that we could see the euro dollar fall to about 145. There's a whole bunch of reasons from both the U.S. perspective as well as the eurozone perspective that you talked about earlier that is causing the euro dollar to really underperform.
Now, the dollar right now is a little changed, right? So what is that saying about expectations for the Fed? When you come into a Fed meeting where you're expected to hear that interest rates will remain at current levels, no change, that the dollar would stay even lower?
Well, first of all, the dollar is, basically unchanged today. But if you take a look at the price action since last week, it's a lot stronger. So what you're seeing today, right before the FOMC announcement, is just some position squaring. Some traders are, unsure whether or not the Federal Reserve will remain skeptical. So they're just sort of offloading some of those dollar long positions. But ultimately, I think the market is looking for an optimistic Fed, is looking for, slightly more hawkish comments, and that's why the dollar remains bid.
Do you think beyond this, we're going to continue to see more bullish trends for the dollars? Because, I mean, rates are going to have to go up more than likely next year at some point.
I think so. I mean, just from a data perspective, I think that you're going to see gradual improvements in the U.S. economy. Also, the key here is that the Fed is going to start ending a lot of their asset purchase programs at the end of the first quarter. So they sort of have to pave the road for that. And I think that this meeting will be the perfect opportunity for them to do so.
Kathy, are you seeing an increased level of support for the dollar?
I am. I mean, one thing that I took a look at is actually the commitment traders report that came out last week, which showed that speculative traders flipped from net, long euros against the U.S. dollar to net short for the first time in May.
Why?
Well, it's because we had that tremendous dollar rally. But the last time this happened was basically in August, and at the time, we saw a very, very big sort of sell-off in the euro dollar. So this is, from a sentiment and flow perspective, a bit of a precursor to the possibility of further losses.
One quick other question, excuse me. Central banks are buying more gold now, so I'm wondering if they're diversifying assets that way, if that could be bearish again for the dollar.
Well, central banks are buying gold, but I think that's sort of a long-term diversification play. Gold sort of dipped a little bit, which they may be looking at as a good opportunity to get in. But I think that's more of a longer-term perspective, whereas right now what we're talking about is, will the euro dollar break 145? What are the catalysts? And I think that the FOMC outcome, the risks are certainly skewed towards a possibility of a break.
We'll have to leave it there.
Thank you.
Kathy Lien calling for a break below $145 euro. Thanks again.